So the Dow dropped around 666 points on Friday after companies like Apple, Amazon, Google, Microsoft, etc. reported their earnings last week. Now, a lot of people made money during this week, but a lot of people lost a lot of money as well. If you did not make any money on Friday, then it might be time to reevaluate your strategy. So in today's video, I'm going to go over some tips to account for a situation like this in the future and how you can take full advantage of that. Let's go. Welcome back, guys, to another video. My name is Nick, and on this channel we focus on positive investing. If you want to see more videos like this and you like this content, make sure to hit that subscribe button down below and hit that bell notification so you don't miss anything. Now let's get into the video. So if you lost a lot of money on Friday because of the markets being down, you're not alone. After we had such a strong rally in the market in January, all three of the major indices, the Nasdaq, the S&P, and the Dow Jones, were all down around 1 to 3% on Friday alone. The funny thing though is if you look at the charts, you can see that the S&P is still up around 3.3% year to date, the Dow is up 3.2% year to date, and the Nasdaq is up 4.9% year to date. So even though we had a big drop on Friday, if you had positioned yourself properly before the beginning of this year, you'd still be up by a significant amount in your portfolio. But now on the flip side, if you did not position yourself before this, you would have suffered some pretty significant losses on Friday. And if you played options, those losses would have been amplified. But like I mentioned at the beginning of this video, there are a lot of people that made a lot of money on Friday. But the question is, how did they do it? So remember, you can still make money in the market whether stocks go up or down. And I want to go over two strategies today that can help you with that. And that's hedging and risk management. So the first thing is hedging, and pretty much what hedging is kind of protection in case a stock goes the opposite way of what you expect. So in this market, we're expecting stocks to keep going up month over month, year over year, etc. But you can't employ strategies to account for drops and days like this, so you can still take advantage of that. So there's different ways you can hedge your portfolio. Some people hedge by holding a portion of cash in the portfolio so they can buy the dip. Some people go ahead and hedge by diversifying, so they buy stuff in the financial sector, tech sector, utility sector. But that didn't really help in this situation because every sector was down really on Friday. But that's another way you could hedge. And the last way people really look at hedging is that they buy put options. So these are pretty much options which give you returns if a stock goes down. So just like how you can buy call options when a stock goes up, you can buy put options when a stock goes down. If you want to learn more about option basics, I'll link my video up here, so take a look at that and make sure to let me know if you have any questions down below. So the second thing I want to look at is risk management. So for my swing trade portfolio, I try not to put more than 10% into a single position. This helps me in case that single stock does crash or whatever. I do have other stocks to account for that. But again, on days like this where the whole market is down, this doesn't really help you that much, but it does help cushion losses. Like for example, when Apple had a huge loss, I did have other positions that didn't have as significant of a loss, so my losses weren't as amplified. For my long-term portfolio, however, it doesn't really matter about if I do 10% or 20% or even more, because those are stocks that I do believe in the long term. And 10 to 20 years down the line, this 2% drop in the market is going to be insignificant. So the one thing I can really say is that it's very important to not over leverage yourself. So I see a lot of people, especially around earnings seasons, go all into a stock because they're like, well, this is definitely going to beat numbers, they're definitely going to go up after earnings. They put all of their money into that stock. And this is, in my opinion, one of the most dangerous and toxic things you can do. If the stock does end up going down after earnings, this could completely blow up your account, especially if you trade options, and you're left with pretty much nothing in your account. So for example, you guys know that I was extremely bullish on Apple, and I was very confident that they would beat their numbers in this past quarter. Well, Apple reported their earnings last week, and they did in fact beat their numbers, but the stock still dropped after earnings, and this was also in part, of course, that the whole market as a whole was down, so this kind of contributed to Apple's losses on Friday. So by not over leveraging myself, I didn't suffer as much of a loss as some other people did in Apple who went pretty much all in on these earnings and they bought weeklies and all that kind of stuff. So I personally picked out more long-term options because I do believe in the longer term that the stock would still continue up higher even though it is suffering kind of a minor dip right now. So many of the major tech companies have reported in the last week or two, but we still have some big ones coming up in the next few weeks, such as Tesla and Nvidia, so keep your eyes peeled out for that. Moving forward, I would personally take whatever I talked about in this video and try to kind of employ that somehow into your strategy because it will help you on days like this where the indexes are down significantly. Now, if you have any questions on any of the stuff I covered today, whether that's put options, risk management, any of that stuff, make sure to comment down below because I reply to every single person that asks a question or a comment, and I'll be more than happy to help you out with any questions or concerns that you may have. So this week's question of the video comes from Anshul, and they're asking me what my opinion on Micron is. So I personally do have a position in Micron in my swing trade account with options, but I don't have any shares in the company because I don't plan to hold this long term. Now, Micron is a great company if you look at it fundamentally. It has a low PE ratio, it has good fundamentals, it has a good balance sheet as well. But it's a very cyclical stock, which is why currently it's kind of moving sideways because investors are not sure if it's reached the peak of its cycle or if there's still room to grow in the cycle. I personally believe that it can still move up higher. I think it will beat its all-time highs sometime in the next few months, but that's something to wait for, and I can't really predict something like that because, you know, stocks can go up, stocks can go down as well. So once again, guys, thank you so much for joining me and thank you so much for watching, and remember to invest positively. Peace.